Hey everybody, welcome back to Liberator Trading. In today's video, we're still focusing on trading SPX options, XSP options, SPY options, focused on 0 days to expiration or 0 DTE. Today, I want to focus on, we've been focusing on tick. I made a couple videos regarding that and using that as an advantage to trade, but today I wanted to zoom out instead of had that granular focus on trading, and I wanted to focus on volume and how you can find volume on SPX because SPX does not have volume that you can see on your screen when you're trading on the platform. It's not something that we have access to as your retail trader. And so, but there are ways around that. I want to show a couple of those to you today. So let me pull up let's pull up ES. These are the futures for the S&P 500. And down here, let me open this up. Um, Down here on every trading platform, there's a volume. Blue line is open interest for futures, but I'm going to get rid of that. So you can see down here we have volume. It shows how many contracts were traded for the ES. Um, And if you read trading books, if you look into trading and you're trying to learn how to do it, you're first going to learn that price action is important to understand, see how the price is moving. But the second aspect of that layer is the volume. And so I don't use the standard volume on here. I use a couple different versions of it, and I'm going to show you those today. So in Thinkorswim, you just go into your study beaker up here, and I type in volume average. Um, so this is going to give you a line on, I'll show you. I changed it to 21 because that's about a month of trading. Because I'm a short-term trader, I want to focus on what the volume is short-term. So you can see they are exactly the same, your regular volume. I'm actually going to get rid of that. Click that off, but it's regular. Um, all that changes down here is they add a simple moving average volume line down here on the bottom. And why is that helpful? Well, one, it's helpful because you can find out on whether or not something's been trading above the average volume, which is something traders use when they're scanning for stocks to trade, for options to be trading. They're looking for the volume to have an increase, and that could be going down. That could be an up volume. It could be down volume. It could be the stocks moving. But like, let's look here for example. This is a year chart. Starting here, this is when the tariffs were announced in February. Look at the volume spike that we had and look at the drop. As you can see, price action is moving down, but volume is also increasing, moving above your average volume. And then we started to get the little bear flag here, came down, and volume started to drop off. So there weren't that many people interested in trading. Um, and then all of a sudden, it ramped up again because we had more volatility with even more price action and more tariff uncertainty. Now, the interesting part about this here is that you can see there's just more interest being traded down here, way above your average, maybe 50% to 100% higher than your average. But then something also interesting that you can see here is that we have these run-ups, but I mean, volume is pretty well below average. Now, these are outliers, obviously, but volume pretty flat up through here, and that typically happens when you're in an uptrend. Typically, in the uptrends, volume is lighter. It's when we start to break down that volume picks up because fear starts to be brought into the market. Limit orders, stop losses are begun to be hit. More participants are getting out of the market and they're selling all of their positions. And you can see right here, people were like, oh shoot, I'm late to the party. And then they started to jump in and we got some bigger volume up here, but then it starts to trickle off. So that's just one thing that you can use in your volume. You can look at the volume average. I like to use it for breakouts. So let's go zoom in here really quick. So here's a level. right there. We kind of consolidated after shooting up pretty dramatically. And you can see we tried to poke up. It may have broken out right there, but as you can see, volume was below average. We may have tried to do it again there. Volume was below average. Now we're not certain if this was actually a down day. It was just because it's red because we closed below that price, so there could have been more volume going up. This was a gap. This came down, but we caught some support down here. Here's a breakout. You could have used this as a breakout. We got this big green candle. You got large volume going up, breaking above a resistance point. And then it started to trickle off, and you flagged, and then we broke out fine eventually. But you could almost say, okay, here's another example right here. We broke out, boom, boom, shoot, going up, going up. So right, so let's just highlight those. I get my oval thing. So using that as a breakout, using this one as a breakout. I'm just looking for examples on the chart. I mean, you can use this for everything. Example given again. Maybe you were looking here, didn't really ever break out, and then we had the tariff news, and maybe you could use that, and then the subsequent days for looking at the trading volume is increasing right here, going down, and we broke through this possible support level and even down here eventually. So that's just one way to use it. Let me get rid of those drawings. That's just one way to use it. Um, so let's go look at the volume again. Another way I like to use volume is the money flow. Now I use the money flow index. Some people use money flow. Money flow is just taking the accumulation. If it's an up day, it'll add the volume. If it's kind of a down day, it'll subtract that volume. But people like to use this as breakouts because they can see the flow of bigger institutions coming in. So when you get big spikes up, typically that's the bigger institutions starting to come in and participate in the market. For example, right, we've got this right here. You could have used that as we'll just draw this right here. Look at that. Okay, so here's the low other high. So you get the pullback, comes up, comes up. You can actually see that there was a divergence there. Price action was going up, but money flow was not increasing. It was actually making lower lows. And then finally, we have a breakout up here, but then we're flagging again. But you can actually see this is actually increasing. So we start to think to ourselves, okay, maybe participants are starting to come into the market and starting to participate. So that's another way. I know I'm kind of going through these, but you can see we've kind of got this shelf right here now. This was a prior resistance as well. It never got above it, kind of bounced around it, and then we finally broke up. So you can use that same as price action. You're just looking for lower lows, lower highs, looking for divergences. So let's remove those. So that's the money flow index. As you can see, there is a zero line for millions coming in, millions coming out. Let's take that out. But I like to use money flow index more, just because it's kind of like it reminds me of RSI, and a lot of traders are more used to using the RSI and understanding that, but as overbought and oversold. But once again, I really use it for divergences in the market. Um, you can use it for oversold. It's not going to be perfect, not as useful, but I like to use it as a divergence. But you can see the money flow. There's definitely divergences happening in the market all over the place because we are making higher highs. But that's just another tool that I like to use. Um, Let me show you what I really focus on. I use volume profile. Volume profile is great because it's showing how much was being traded at that specific price. So basically it's taking your volume from down here at the bottom that's vertical, and then it's putting it horizontal but at the specific price levels. So for example, this is what I would do. I'd come in, this is a 1 year, 1 day. I like to look for the nodes. These act as support and resistance where they come out. They're little mountains. When there's a big gap like this, you can see the expectation is that price could potentially fall through there because there was no action. There's no orders being placed on there. There's no psychology behind in the market saying, that's not really a good price. There wasn't a lot of participants. So what I'll do is I'll just come grab the middle of one of the nodes and I'll just drop a line on there. And that's my price level. It's not perfect. It's not accurate, but it's giving me an idea that, okay, there's a lot of trades happening right there. I mean, you can come over here and you can see this. We came down, flagged, then we came back up, drop down, drop down. We bounced off of it today. So I'd use that as key support. When you get these little nodes, right, I mean, you can see all of this volume that's traded in here. So this is the red is the point of the control. So that's where the most volume has been traded over the time frame of your chart. And then I have the top 20% in here, which is this volume area, the high volume node area. So I highlight that. As you can see, there's not a whole lot of volume going on, even in this upswing right here that we've had. There was more volume being traded in these areas coming up and then down here than before we broke out. But like I said, that's usually the case when you're going up. It's not as high as volume as when we're coming down. So that's why there's a lot more volume being traded down here. So another thing that I would do is I'd come down here, you get this small volume node, and then when you get a shoot up like that, I'll typically, you can see, we rejected. I would just put a line on one of these nodes down here, just in the general area. Now we could bounce here if it came back, we could bounce here, we could bounce down here. Who knows what's going to happen? You don't. But you've got the price listed right there. Oh, I need to change this to ES. I apologize. That is not ES. This is the futures. We are on SPY. I really apologize for that. But anyways, you get the gist. On ES, there's the same thing. There's a little spot right there. There's one down here. I'll put one right there. I'll put one. We'll put one down here because that's the point of control. And then I'd put one down here. I typically only mark about 3 levels that I like to see. Oh, it didn't do that. So we'll just bring that one back up here. I like that level right there. Just personal preference. There's just more activity right there in that general area. So I usually pick 3 on the 1 year, 1 day chart to see what I'm doing. Look for levels on where we could potentially bounce. Then I'll go into the 20-day, 1 hour chart and I'll look and see what's going on in there. And you can see that these levels are totally different. And what I'll do is I'll duplicate these and I'll be like, okay, here's a spot right there that we've bounced off quite a bit. There's a node. And then I will change the dash so I know that it's an hour. It's on the hour. Then we'll duplicate another one. Okay, there's a lot of volume being traded right there. Let's just drop it in there. Then we'll duplicate one more. Where do we think? We got the point of control. We've got 2 levels. We're kind of in the middle of that, so we'll leave that right there. Maybe we come out here and we drop one right in this high area, right there. Because we're closer up here than we are down here. So there's 3 levels. So 63.25, 63.04, and 62.80. So there's a couple levels. Now we'll go to the 5-day, 5-minute chart. And I'll drop some levels on there. And so then we'll just go, okay, let's duplicate and let's go find some. So we've got a lot of volume right here. So an expectation that you might have tomorrow is we're at this level here. Maybe we come up and maybe we reject it. So we'll drop that one in there. We'll put one down here on the 5-minute. You can see there's a shelf. We'll drop one right there. Boom. And then maybe we'll duplicate that and then we'll come down here to that one. There's a lot of volume that was traded on this node. All right, these are just ideas to help you visualize and see what's going on. There's some people out there that don't need to visualize this. They can physically see that this is where the volume is at. And so they come in there and they trade it that way. But I would focus on just 3 lines on your volume profile. Let me show you the settings for my volume profile. So I have automatic, then I have 1.0, I have the time profile for the chart that you're on, multipliers 1. I don't have it on expansion. I like it on the left side of the chart rather out on the right side. I have 1000 profiles, point of control, value area. I do 20% for the value area percent, and then my opacity is 50, so it's not blowing up in my face. And that's just a simple way you can go out and you can find your own little levels to plot your volume. And you don't have to look at the chart and say, okay, where am I supposed to put this? Well, I could put one there and maybe one right there, and maybe I put one here at the top and one right there. You don't have to look at the chart and figure out where. As you can see, when we got up here, we've been in this channel. Boom, 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 boom. Just been bouncing around. So maybe an expectation you have is, okay, if we break this channel, maybe we come down to one of these nodes. Maybe we come down to here, or we drop down to here because there wasn't a lot of volume. On the 5-day, maybe you boom, or maybe we skyrocket back up here to these all-time highs that we made, right? Who knows? We don't know as traders. We can only just prepare for what's coming. That's how I use the volume profile. Another thing that I use, let me pull up my SPX. Now you won't see anything, is I use expected moves to help me understand levels. I know I was talking about volume, but volume is part of plotting a level on a chart that you're looking for in a target. And so where can you get these expected moves from? Now, there's a lot of platforms out there where you can pay to have an expected move, but if you just want to do the math yourself, I'll trade you. It comes from the options market. So at the end of the week, I come in here, I'll type in SPX. I use the close of the last Friday, and I go to the option chain for the next Friday, and I just tack on what the implied move is, and I plus or minus that from the last week's close, and then I subtract it from last week's close. As you can see, we're really unchanged from last week's close. We closed here last week at 62.50 at 62.59, and then I just added whatever it was and I subtracted. Last week we barely moved, so I use that as levels. So if we get up here, maybe there's a pullback, or if we come down here, boom. But it just helps me understand the expectations of the market and what they're expecting, what the big players are seeing in the options market. And so I use those as levels as well. You can even plot on SPY like I was doing. It's the same thing. So there's one. We like one right there, and then there's the point of control. There's some levels. Go to the 1 hour. Let's look here. Right. I'd put one there. Change the style. We'll duplicate it. I'd put one there. I'd put one down here like that. Duplicate this, and I'd put one down there. So those are my expectations for SPY on the 1 hour. Then on the 5-minute, oof, we're condensed in the 5-minute on here. I typically don't use SPY, but I'm just going through showing you examples. I use the futures. Okay, there's one. So let's duplicate this. I'd put one up here. There's a lot of activity where we rejected a couple times. And guys, you can actually see where price is moving away from these points a lot of the time, right? You can actually see it. We just hung out down here in this area. We came down, boom, below it. We hung out right here, shot up. We hung out right there, shot up. That's because there's lots of volume being traded right there. We just hung out in this area for a couple months. Then we dumped. And then we hung out there again in the same area, and then we went up. So as you can see, there's not a lot of volume up here. We need to catch up. Like, let's just pull up Tesla. It's been pretty volatile. But if you actually look at it, when it came up to here, there's quite a bit of volume being traded up here. And then it rejected it. That could have been a resistance level, and it just pushed down. And then it maybe came down here and caught some support. Then we jumped back up and it's back in that same area and then it jumped back up. It's just a better way to visualize what the volume's doing on the chart. That's why I use it. That's why I use it to mark my levels. Um, Quick video. I know there's some rambling going on, but I'm hoping that it helps somebody in their trading journey and trying to figure out what am I missing, because we've all been there. Like, what am I missing? How can I make this easier for myself? Now, I wish there was a way to plot the levels in Thinkorswim on the volume profile. It just pops it out there, but I haven't been able to figure it out, and I've scoured the internet trying to see if anybody was able to figure it out, and I can't find anybody that's able to do it. I think it's just the limitations. But if you practice doing it, you'll understand it better, I think, rather than having something automated for you. Yes, it makes it easier, but if you're beginning out and starting your journey in trading, I I would hope that you would just practice doing it on your own so you can visualize and see what's going on with the chart and understand it a little bit better. So I hope you have a good rest of your week. Hope the video helped. Please like, share, subscribe, comment, tell me I'm an idiot, tell me I'm dumb, have a conversation with somebody. Hope you have a good rest of your day.